Hello everybody! So the title of today's video, which I haven't worked out yet, is gonna be a little clickbait inspired. So let's just get that out of the way right now. But what I want to do in this video is look at the very big comparisons between the UFC and the world of investing. And I think there's quite a few comparisons that we can make. So you'll have to bear with me because my first love is not the UFC, and you might be able to come up with better comparisons than me, but I'll do my best. And feel free to tell me in the comment section what it is that you think I got wrong. So what I want to do is get people who are interested in the UFC interested in stock market investing, because I think they're very similar, or at least that there's a lot of overlapping components. And I want to point out the shortcomings of analysts using Joe Rogan as an example. And I also want to point out the value that analysts bring, which I believe is understated. And finally, I want to bring up some key differences between the UFC and the stock market that I think make the stock market a way better place to put your money. And that may be an obvious statement to some people, but to other people, it's news. So before we begin, I want to preface this with, I know that Joe Rogan is not an analyst, but I think that he knows a lot about the sport and that he would make as good of predictions as anyone else could. So anyway, that's sort of the video outline. Let's get into it. And don't forget to hit the bell icon if you want to receive updates when I post new videos. So when it comes to the world of stock investing, analysts are either perceived as heroes or absolute failures. Personally, I haven't heard a lot of great things about stock analysts, but they are able to keep their jobs, so somebody out there must like them. There are famous investors like Warren Buffett or Peter Lynch who have reached an untouchable level of fame and reverence. They don't get a lot of criticism, let's be honest. They talk and the world listens. Charlie Munger too, these guys are kind of too big to be ridiculed, but they're also not technically analysts. Then there are guys like Kramer at Mad Money who know so much about the stock market and always have an opinion on everything. He even takes phone calls and somehow knows within like a 30-second phone call whether a company is a buy, a hold, or a sell. I mean, it's pretty amazing what he's doing. Of course, when you're giving your opinion all the time, you're bound to get some things wrong. Then there are the less known guys who work at big companies like Oppenheimer or Wells Fargo. You gotta be a pretty diehard fan to know these guys by name. The average person isn't gonna know who these guys are, but you might see them on an investing show giving their opinion. So of course there's gonna be a lot of analysts in the world of UFC, just like there's in the stock market. I would put Joe Rogan somewhere up there with Warren Buffett and Peter Lynch. At this point, he's untouchable, right? He's the $100 million man. He's a longtime UFC commentator and wildly successful podcaster. I mean, I can't really believe that there's a lot of people out there who don't know who Joe Rogan is. There are guys who have shows kind of like Kramer's Show, Chael Sonnen, Dominic Cruz. Now, they don't have a switchboard with buzzers and whistles on it like Kramer does, but they're somewhere in that ballpark. They're always giving their opinions. And then if you're always betting on fights, there's going to be those guys that the diehards know by name, but most casual viewers don't really know. It's a very similar world with a similar structure. But instead of human opponents battling it out in the octagon, you have these big companies competing for dominance in the market. So part of the reason I want to compare these two worlds is to show you how similar Joe Rogan would be to a stock analyst. So how can we compare the very aggressive world of UFC to that of the stock market where people are wearing suits and ties all the time? When most of us watch a UFC fight, we have our hopes set on the outcome. We're rooting for someone. We like a particular fighter, and it's usually a mixture of their abilities and their personality. In the investment world, the closest thing I can think of is someone like Elon Musk, right? He's very out there, in-your-face kind of CEO. Most CEOs aren't doing that. But you could probably put some of the other CEOs in that category, like Zuckerberg or Bezos. We like them and want to see them succeed or fail based partially on their personality. Or all those people on Shark Tank. It becomes like a bit of a drama or a soap opera. So what else could we compare? In investing, we have stock metrics. So, for instance, the price to earnings ratio, free cash flow, EV over EBITDA. I would say stock metrics are very similar to fighting moves. So a price to earnings ratio might be like a Kimura, or free cash flow might be the equivalent of a guillotine or something. And why do I say that? Well, they're all things that you'd want to be familiar with, even as a viewer, but they're not going to be things that completely determine the outcome of a fight. If a company has a low price to earnings ratio, just like if somebody has a wicked armbar, it's not going to completely determine the outcome of any particular match. It's definitely something you'd want to take note of for sure. You want to know what's indicative of a company or a particular fighter. Just because a particular company isn't profitable doesn't mean that its stock price will be negatively impacted. It's something you'd look at, like this guy's takedown defense is weak, it's something you want to be aware of. But you wouldn't say like this company has a low PE ratio or this guy has, a great rear naked choke, so I'm going to bet on them. It's not going to be a one shot deal, right? So I would say stock metrics are very similar to fighting moves in that it gives you some idea of what might transpire and it gives you something solid to look at over the course of time. But someone could still pull something new out of their bag of tricks. Or you could break either of those things down into their components. And you could look a little closer at what makes up a PE ratio, or you could break down a fighter's kick into how he twists them hips, man. How twists them hips! And very much in that idea is just past performance in general. If a fighter always shows up ready and is well prepared, then that's going to be a big positive. If a fighter says they're going to start training and putting in the work, then it just shows that they've been resting on their laurels the whole time like BJ Penn. With companies, you want to invest in ones that are always bringing it. And certainly some companies could end up turning themselves around, but you want to give them time enough to prove that they actually have. And what about something like cheating to win? That's always going to be a very human quality. I would think in the world of the UFC, it's going to be drugs, performance-enhancing drugs of various types. And in the world of investing, it's going to be cooking the books, right? Like Luck and Coffee would be a great example of that, just lying. And in both arenas, there's going to be regulatory groups that try to make sure that things don't carry on in an illegal fashion. Groups like the Anti-Doping Agency or the Securities and Exchange Commission. I'm sure there's more in both arenas. I just can't think of any. Then there's just getting a good fighter at a good price. That can be hard to do. What about a fighter like Conor McGregor? It can be hard to get a good price on him because his fans are so rabid. We have that in the stock market too. The whole market will fall and Apple's stock price has never been higher because everybody and Warren Buffett are buying it up. You might really like McGregor or Apple, but you can't get it at a good enough price for it to be worth it. The risk to reward ratio just isn't there. That can be pretty frustrating. Or what about meeting expectations? If a fighter is expected to win easily and then loses, that can be a lot like forward guidance. In the stock market, forward guidance can often be a big thing that moves the stock price. And if a company misses their numbers, that can sink the stock price pretty easily too. Or how about biases? That's going to be in both worlds. If you've been let down by a fighter before, your bias is going to tell you to not put money on them again this time. Or if a fighter has performed how you wanted them to in the past, you'll be more likely to put money on them again in the future, even if all the incoming information is telling you that that's not a very good idea. And if you've invested in a company with good results, you may be more prone to investing in that company in the future, and you may even see them as a good company. That's called being married to your stock. Meanwhile, it may be poised to fall drastically and may be overbought. Or there's the gambler's fallacy. We humans tend to think that future possibilities are affected by past events. That might be why casinos do so well. If you think red on the roulette table is more likely to come up because it's been black the last 5 times, then your bias is leading you into trouble. And that is a great segue into statistical analysis. This particular fighter's won this many fights. This company beats on earnings 75% of the time. There's no end to how deep you can go with statistical analysis. But past performance is no indicator of future performance. Or what about the tail of the tape? Maybe that's something like a company's annual report. It's kind of a promotional effort to gain interest. It gives you some background and some potential outcomes and lets you know enough about their vulnerabilities to make things interesting. And in general, you need to give people something to embrace. You need to promote what you want them to be interested in. You're trying to sell the fight or trying to sell the company's shares. Gives you enough relevant information to pique your interest and get you on board. So I kind of feel like we could do this all night, but let's get to Joe Rogan. What does this have to do with Joe? So Joe's been with the UFC for a long time as both a backstage and post-fight interviewer, and then as a commentator. He's a black belt in Brazilian Ju-Jitsu and in Taekwondo. Now I feel like there's a lot of Joe Rogan superfans out there who are going to be mad at me for not knowing enough about him. So if you know more, good for you. Good for you, I don't know, that's all I know. All I'm trying to get at is Joe knows fighting. He knows MMA. That's pretty much my whole point. And Joe not only has a background in fighting sports, but he knows the fighters. He has them on his podcast. He probably knows the coaches and members of the various camps. He knows what performance-enhancing drugs these guys might take or are taking, and he's probably taken them with these guys. My point is that he knows the fighters and their mindsets and just everything you could hope to know as a human being about the sport of UFC, he's got a knowledge of. So the question then is, how good would Joe Rogan be at picking the outcome of fights? Having every possible advantage and the equivalent of insider information, how accurate would he be? Could he consistently pick the outcome? Would Joe Rogan take his $100 million and invest it in fight picking because he has every possible advantage known to man? Could he beat a coin toss? What ratio of right guesses does he need to be a winner, or at least to just maintain his credibility? And this is where it's similar to a stock analyst. How often does Joe need to be right in order to maintain his credibility? Some well-known analysts are right once every 10 years. They're betting on recessions. And in the world of sports betting, I gotta think that you have to be right at least 50% of the time. And that's if nobody's taking a cut. And if you're placing your bets through a bookie, now you gotta be right even more often because you gotta pay the bookie. Now, the juice doesn't seem like that much, but now you gotta be right even that much more often. So where the world of the UFC and the world of the stock market diverge is that you don't have to sell out of your positions at the end of each trading day. If you were required to, it would be no easier than sports gambling. And that's because predicting what a stock will do on a daily basis is hard. And with investing, the time frame is so long. You just have to predict if a company will do better than it's doing right now at some point in the future. It isn't like guessing, will Conor McGregor win this fight? It's like guessing, will Conor McGregor ever win a fight? And not once every few months, but every day, 5 days a week, over the lifetime of the whole company. The odds become stacked in your favor that at some point, you will be right. And this is just a guess, but I think that Joe wouldn't be a particularly good fight picker, and not because he doesn't have a whole lot of knowledge. I think that the world of fighting just has too many variables and uncertainties to accurately pick the outcomes of fights consistently. And you'd have to be very consistent to beat the juice. So the same is true of the stock market. You can know everything there is to know about a particular market, everything there is to know about a particular company, and still be wrong. And I think that expecting a stock analyst to be right all the time is just unreasonable. You got to take it for what it is. It's just an opinion in a wildly erratic arena. But unlike sports betting, the stock market is a pretty forgiving place. Oh, are you still there? Anyway, I hope you enjoyed the video, had as much fun watching it as I had making it, or possibly more fun. See you next time. If you like what you saw, give me the thumbs up and subscribe. And don't forget what I told you.